Good day, people. It's your boy BMHD from the FOREX&YOU Academy. Welcome back to the new viewers. Welcome to the community. I just hope you enjoy the content that we post. And for the old viewers and subscribers, please don't forget to hit that like button, comment, share, and for the new viewers, please do hit the subscribe button. Today we're going to be touching base on your trend trading techniques, why in the community or in the FOREX&YOU Academy we decide to, or when we decide to look or spot a change in the trend, why we start looking for another directional bias. We're going to be speaking about a whole lot of things. So without wasting any further time, let's get straight into it. So guys, we know trend trading, right? So you're gonna have your higher high, higher low, higher high, higher low, higher high, higher low, in anticipation for the next higher high, right? And then here we still have your higher, lower low, lower high, lower low, lower high, lower low, lower high, in anticipation of the next lower low, right? So for someone who won't be really getting what I'm trying to say, I'll just do this. This will be for higher high, right? This in general is your higher high, and then so this will be your higher high, right? This will be your higher low, right? I won't mark everything, but yeah. And then on this side you have your lower low, sorry about that, your lower low, and your lower high. So basic rules or principles of a trend is that as long as we continue to break, let me do this. For as long as we continue to break your higher high and maintain and price maintaining that level, even though we might just have a key level right here that still validates the higher high, right, or the uptrend rather. So price can either test this or have a deep pullback for double bottom, which can be something like this, which still validates the uptrend. So more often than not, we just expect a break of the higher high, breakout and retest continuation, right? But the minute we break the last higher low, what I mean by that, let me just get this out of the way first. What I mean by breaking the last higher low, that being this point here, which created or broke above this higher high, when we're gonna start now to come and break this higher low, we can now start to shift our bias, because we've just broken a higher low that has just created the new higher high. This is no more our recent high high. This is the new higher high, and from here the market broke the higher low, which just violated the principles of maintaining an uptrend. So that's why we'll shift our directional bias to a sell bias, vice versa with a downtrend. So vice versa with the downtrend, you know, and whoops, you know, it is the same thing when we eventually break our last lower high, and then the market behavior or structure starts to shift, right? So with this, you also can call it a 1 to 5 structure, right? Or QML, whatever you want to name it. But preferably that 1 to 5 structure, because now this point here, let me do this. This point here will be our 1, this will be our 2, and this will be our 3, and then this will be our 4. The minute 4 breaks 2 around here, it now validates the whole thing, you know. And then from 5 we can start looking for entries. That's why it is a 1 to 5 structure. So from 5 we can start looking for your potential setups or entry, however you want to call it, you know. Same goes with the downtrend. You can have your 1, 2, 3, 4, 5. You start looking for entries, even though it might be a deep pullback for a nice head and shoulder, QML, whatever, inverse head and shoulder. Even here you can have a deep pullback for that head and shoulder, you know. So yeah, that is just what I wanted to discuss before anything. So just give me a second. So now we also have something called an early wick retest from the 4H candle in line with the candlestick formation. So if we're going to be having okay, I'll use that. If this is for a downtrend, by the way, I'll try and fix the colors. Let me just do this for people to understand it much more or in a clear manner, right? And then we're gonna have your wick, you know, you're gonna have your wick, you see. From here, right, let us say we also have another candle snap. Let's say we have another candlestick somewhere around here, right? Another bullish candlestick. So in theory, we have a level right here in the market. This is our mini support that price is holding. So we can have a breakout, which is a break in continuation of structure. Before that, let's just, maybe we've been moving like this, you know. So this is our lower low, lower high, lower low, and the retest that just came in right here. Of course, in on a lower time frame, you'd see a nice retest. It's just that now drawing these candles would be a lot, but you get the idea of what I'm trying to talk about. So as soon as we have the next candle turn bearish, because now initially we're waiting for price to break this level right here, you know, and then eventually we do get that bearish momentum that we want to see. You know, we do get that next. Mind you, these are 4 candles, right? I'm just gonna or just act as if this is a 4-hour chart, you know, just keep that in mind. So these are actually for our candlesticks. So the next candlestick that will form, right, might not be a retest that you want to see on a higher time frame, because essentially if we're gonna have, let me do something, in anticipation for this to continue bullish. Okay, fine. After this breakout of this support area, and we have a strong bearish candle 4-hour close below the support level, so we still anticipate the market to continue bearish. So the next for each candle, when it opens, right, most of you beginner traders, or most of you guys, just want to see the market break and come back to retest, so I feel like that will be a lot for a day trader, because now you will want the market to leave this area, then come back with 4-hour candlesticks. Whereas in a lower time frame, this wick here represents a retest, but not everyone will see it, hence it's a wick. Now we have this candlestick formation. How does a candlestick form? I'm sure all of us know that if we have an open right here, right, let me do this. If we have an open, I'll explain why I'm doing this. If we have an open, no, that's not what I'm looking for. If we have an open right here, right, the candlestick opens to the bearish side, right? But I'm trying to illustrate why we have this wick there, right? Let's say we have a candlestick open right here. The candlestick will start pushing bullish first and fill this wick right here, which is a lower time frame retest, like the 5 minute and stuff like that. And then it starts to push bearish, leaving that wick behind, and fill the bearish body candle, So this wick here, the range of this wick, on a lower time frame, we take it as a retest, So that's why we are day traders. We can't wait for multiple 4H candles to come back to this area and retest, even though it is more often than not bound to happen. But this is how we approach the market, right? So after this wick retest, if you can go down to your 5 minute chart, you'd find that there's an intraday trend that has already been forming, Okay, no, that doesn't look. There's an intraday trend that has already been forming, and you might just find that price was just coming to tap back a double top or retest, whatever the case may be. So then you'd find your entry right here, right there, right? So now on the 5 minute chart, right, if ever we're coming back for a double bottom, bear in mind this for each candle has already closed, so we are at the new open, and we'll just say price is still somewhere. What is happening now? Price is still somewhere here. Oh, okay, this thing is giving me trouble a bit, but let's say price is still here, still forming this wick. So you'd find that on the 5 minute, price was just coming to retest, and as soon as you see that depletion of bulls within the market, whether it be your doji candlesticks, pin bars, whatever you call it, just showing signs of rejection, you know, as long as it's showing signs of rejections, and then finally you wait for that bearish momentum to step into the market, you know. And this is just the 5-minute candlestick. So right after it closes, personally, I'll just take the trade, because here's the story that we start to build now. Price is pushing down. We've just created a support level that has been broken by a strong 4H candle, bearish 4H candle, and then we have a retest within the intraday time frame back to this support turn into resistance key level, and we're having a reaction, which is we see bears stepping into the market. So I'm comfortable taking the trade and putting my stop loss just above the wick, you know, and then going for your target, starting from 1:1 all the way to 1:3 or 1:2, depending on how you're feeling, you know, how you want to take or hold the trade, you know. So we'll move on to a live, not a live, but a trade we took today within the community, and it's still, well, it is sort of live, you know, and I'll just explain how we managed to take this trade. So right here, when I woke up, this candlestick right here had already formed. Let me use this candlestick right here had already formed, right? And it is in line with the USD weakness and yen strength. So we expect a continuation of this structure right here. And if you can notice right here, when we're gonna scale down to a large time frame, and you'll see the retest I'm talking about. Even here, that's how we managed to get into our first trade, which I'll share with you guys in a few. So I wake up, this is the 7 o'clock close, you know, still in the morning, 7 o'clock a.m. South African time. So we've got this bearish 4H close, right? So in my mind, I'm like, I'm gonna anticipate the market to continue moving bearish, right? So now I have a market bias that says we're looking for sells, right? So now scaling down, or seeing the market create this lower high, I just marked it off, and for as long as price keeps trading below this, we're still good for sells. And if you can scale down to just a lower time frame, which is a 1 hour, we have broken this higher low of the structure that created this higher high, which is what I was explaining in the example before. And then as soon as we have that break, we had the retest, and we were good to sell it. So now we found an entry somewhere right here, which I'll share with you. So if you can see here, this was the 7 o'clock for a candle which closed at 11, right? So when we scroll down to M5, we're going to look for a time frame that is at 11, right? Let me just mark it like 11, which was right there, 11, right? So as I wait, I see the market form this sort of resistance within the market, and we had a lot of multiple week rejection, and then after this momentum shift within the market, indicating that bears are in, I entered here and I placed my stop loss above the wick here, right? And then I let it run, of which I'll share in a few. This second entry here was what we shared at the VIP group, just to be sure, you know, and I'll also explain why we entered there, because we had the market creating that fall off resistance, right, maintaining or holding that level, and then we had a bearish 15-minute candlestick momentum. That's when we entered right after it. Stop loss just also above the level that was holding, right? So that is the trade and what I was explaining about these wicks that keep forming. We don't have to wait for the market to break, leave, come back and test. Sometimes you can just enter through the continuation, because now if you're gonna wait sometimes for those break and retests, you just find that you never get the break and retest. You just get a support level that has been formed, broken, continuation. You're still waiting for price to come back and retest here, even though it did, but it was just such after a long time. So we don't work like that. So this current for each candle, we can check from 11 to 3 p.m. South African time. You can just see from 3 p.m. what has been happening. Let's go to a much lower time frame. 3 p.m. we had this candlestick now starting to reject, forming that wick, but we'll see how that goes. This trade was shared within the group, and I do anticipate the market to continue pushing bearish up until 130.735. And more than anything, this is the trade that we're still holding. So we can anticipate USD/JPY to push back down to these levels, and that will be it for today. So also you can also see that we in line with yen strength and dollar weakness. You can also scale down or move on to the next pair, which correlates with GBP/JPY. Even here we could see some sort of yen strength, although we are trapped in the range. That's why I'm waiting for either break of this side or the upside, rather, back to these lows right here. So more than anything, even here it still indicates yen strength, right? And then here we're still seeing dollar weakness, as well as we also saw how CPI and PPI were negative, so it definitely makes the dollar weaken as well. So that adds on. But that is it for today, guys. Thank you for watching. Don't forget to turn on the notification button so that every time I upload you get notified. Don't forget to like, comment, share and subscribe. It's BMHD, your boy from the FOREX&YOU Academy, signing out.